All right, so we saw in the last video that the preconditions for an audit are basically that the financial reporting framework is acceptable and also that management has agreed and acknowledged its responsibilities. So let's explore how to determine the first one is present, that whether the financial reporting framework to be applied in the preparation of financial statements is acceptable. So how would we go about doing that? Let's go down to some of the other explanatory material to understand this area. Okay, so now we're down in AUC section 210.82 about the financial reporting framework. So we remember from prior videos that the financial reporting framework is basically the criteria that the entity uses to prepare its financial statements. And it's also the criteria that the auditor uses to evaluate and measure the subject matter in those financial statements. And so if we didn't have a financial reporting framework, there wouldn't be a basis for management to prepare its financial statements. And also there wouldn't be a basis against which the auditor performs his procedures and determines whether the accounts and disclosures and such are within that reporting framework. Basically, we wouldn't know what is appropriate. And so how do we determine that the financial reporting framework that management has chosen is acceptable? And in order to do that, we need to understand several factors about the entity and the financial statements and the environment that they're in. So first, the nature of the entity. We need to know if it's a for-profit or a non-profit or a governmental entity, because each of those types of statements may have different needs as far as what financial reporting framework should be used. Also, the purpose of the financial statements. So different users may need different disclosures or presentations of the financial statements for their needs. Also, the nature of the financial statements. So, for instance, are we looking at an entire set of financial statements or maybe just one financial statement? And then also, maybe there are laws or regulations that prescribe the applicable financial reporting frameworks. The entity has to use a particular framework according to law. And so there may be circumstances where the financial statements are used by a wide range of people and entities. For instance, maybe the customers and vendors and regulators, insurance agents, the owners, bankers. So in that case, maybe it's appropriate to use a general purpose framework. In that case, the individual specific needs of the users may not be met, but it would provide relevant information to a wide range of users. And a general purpose framework might be generally accepted accounting principles, or GAAP. There also may be instances where we need special purpose frameworks. For instance, laws or regulations might prescribe a certain financial reporting framework that's more appropriate to the users of that financial statement. So, for instance, maybe a cash basis of accounting, modified cash, or tax basis. So, in summary, the auditor needs to make sure that the financial reporting framework is acceptable for the needs of the users of the financial statements. And if throughout or in the middle of the audit they discover that maybe this isn't the appropriate framework, then a new terms of the engagement will need to be arranged, and maybe a new engagement letter with the client that reflects the change in the framework.